Hello everyone and welcome to this webcast delivered by the ISM Trust. My name is Trevor Ford and I'm a member of the ISM Council, and amongst many other things I work as an accountant. A few points before we begin. The content of this presentation is for information purposes only. It's not intended to be a substitute for legal or other professional advice, and it shouldn't be relied upon as such. ISM members can contact one of the ISM helplines or the ISM legal team if you have specific questions, or do feel free to email us after this webcast if you would like some further advice on the business formats that I'm going to be talking about. This webcast will be available to view on the ISM's website at ism.org/webinars. So today we're going to be looking at suitable structures for setting up your business. I'm going to be dealing with the 7 most common formats, starting with self-employment, which I suppose is the most basic of all business formats, and ending up with limited companies and registered charities, and they are arguably the most complex. We're going to be doing this by considering half a dozen case studies, all of which will have one crucial element in common. And if you have a pen and a piece of paper handy, I'd like to start by asking you to write down the names of these specific case studies. And I should also say, I suppose, as they do in the movies, that any resemblance to actual persons, living or dead, is purely coincidental. Right, the first case study relates to my old friend Dennis Marshall. Dennis Marshall, please write down Dennis's name for me. Dennis Marshall is a self-employed musician. He does private teaching and some performing work. The second one we're going to be looking at is called Captain Ismay's Quartet. Ismay, I-S-M-A-Y''S. They're a commercial string quartet. They do cruises and they do corporate functions and so on and so forth. Captain Ismay, as some of you may know, was the chairman and managing director of the White Star Line, which of course was the company which owned the Titanic. And Captain Ismay was actually on the Titanic when it sank, and he survived, but the story is that he left the boat as the string quartet were playing on board, and of course they did not survive. So Captain Ismay's Quartet is my second case study. My third one is a Baroque ensemble, and they're called Dowland's Dismay. John Dowland, the English Renaissance composer, was famous for his melancholy songs. So Dowland's Dismay is an appropriate name for a Baroque ensemble. The fourth example is Charisma. They are an artist's agency or artist management company, whichever you prefer. Charisma, a nice name for an artist's agency. The fifth one is a company which supplies unusual musical gadgets, and they are called the Musical Gizmo Company Limited. The Musical Gizmo Company Limited. That's my fifth case study. And the last one is a charity which supports elderly musicians, and they are called Music Is My Life. Music Is My Life. Have a look at those names closely, and there is a crucial and important factor that they have in common. You will see that the letters ISM are at the middle of each of them. Whichever business structure you decide to adopt, you will need professional support and professional advice. And that's what the ISM is here for. And that, I hope, is why you've chosen to listen to today's webcast. Let's start with my old but fictitious friend, Dennis Marshall. Dennis is self-employed. He works for himself as a freelance performer, and he gives private lessons. But self-employment can also include many activities under the legal heading of trade, profession, or vocation. This is the most common type of business setup. It's different from employment because there is no salary as such. You have complete control over what you do and how you do it. You're free to decline work if it's offered to you and you do not want to do it. And you are often allowed to send substitutes or deputies if you don't actually want to carry out the work yourself. You will supply your own equipment, and there is no security. I suppose there is an element of risk in being self-employed. Music is one of the very few professions where self-employment begins before you are what you might call qualified. Many music students are already self-employed to some extent, taking on freelance engagements and giving private lessons long before they've actually got their degrees. However, their income is not usually high enough for them to be required to register with Her Majesty's Revenue and Customs, HMRC, as self-employed. More about that later on. When you're self-employed, there is very little separation between your personal and your business finances. If you run into debt, all your assets, both your business and your personal assets, can be claimed by your creditors. Just consider the situation where you are promoting a concert by hiring the Royal Albert Hall. As you're self-employed, you sign the contract and you are then personally liable for the Royal Albert Hall hire fee. You've probably engaged performers as well, and also paid for the advertising and the publicity and many other expenses which are connected with concert promotion. You're entirely reliant on ticket sales for income. And if nobody turns up on the night of the concert, it's no use saying that your business has gone bust. The whole management, not to mention all the musicians that you have engaged, will come to you personally for payment. And if you can't pay, you can be declared bankrupt, and that may well mean that you lose your house and all your personal property. So self-employment is not a sensible option if your business has significant financial risks, such as concert promotion. Most self-employed businesses have no serious element of financial risk, and as such don't need any particular business protection. How do you register for self-employment? HMRC calls self-employed individuals sole traders, and you can register at the HMRC website www.gov.uk/set-up-sole-trader. That's hyphenated, set-up-sole-trader, gov.uk/set-up-sole-trader. And there you will find a CWF1 form, which you can fill in. You can submit it either online or by post. You are required to register with HMRC by the 5th of October in the business's second year. So, for example, if your business starts on the 1st of May 2019, you must register by the 5th of October 2020. There are actually now no penalties for registering late as such. But if you do register late, then it's very likely that you will then submit your tax return late and pay your tax late. And of course, there are significant penalties for that instead. You're liable for income tax on your profit, and do listen to the webcast on income tax and national insurance if you're interested in learning more about that. But you're liable for income tax when your profit in the current tax year, which is the tax year 2018-19, goes above £11,850. You're also liable for Class 2 national insurance contributions, which are currently £2.95 a week, if your profit is more than £6,205. So you need to register according to the national insurance and not the tax threshold. If your profit is approaching £6,000, then you should be thinking about registering with HMRC straight away. Class 2 national insurance used to be paid weekly, and then it became monthly by direct debit, but it's now added to your tax bill. So you don't specifically need to make direct national insurance contributions to HMRC when you're self-employed. You're also liable for Class 2 national insurance contributions at the rate of 9% on your profits above £8,424. So the true tax rate isn't 20%, which is the basic tax rate as far as people are aware, but it's far more like 30% by the time you take into account Class 2 and Class 4 national insurance. In addition, if your business turnover means income, goes above £85,000 a year, you are also required to register for VAT, value added tax, and that means that you will need to charge everybody you work for an extra 20% on your fee, but not on private one-to-one teaching, which is exempt from VAT. There is also the fact, I suppose I should mention, of the imminent approach of what is called making tax digital. And this will apply from this year if you are registered for VAT and above the £85,000 income threshold. And this is going to mean submitting quarterly returns to HMRC online. And over the next few years, the idea is that will apply to everybody who is self-employed, whether VAT registered or not. Isn't that going to be fun? Let's move on to Captain Ismay's Quartet, a commercial string quartet. It doesn't exist to give concerts as such, but it mostly performs on cruise liners where there is good employment for musicians who don't easily get seasick. It's also available for weddings and corporate functions and so on. Most string quartets and other ensembles are partnerships of one sort or another, but this quartet, being a commercial quartet, has been set up by a violinist, and she retains full control over everything. She chooses the other three players from a pool of musicians. She negotiates the contracts and the fees. She handles all the publicity and the marketing. None of the other three players has any real obligation to the quartet. They simply turn up when they're booked. They perform as required and they collect their fee and they go away. But the owner of the quartet makes as much money out of it as she can. This is, of course, just a slightly different type of self-employment, although here the self-employed individual is engaging and paying other musicians. These musicians are themselves working on a self-employed basis. They are free to accept or decline the work, and so there are no employment contracts in place anywhere. All the income which the owner of the quartet receives from the engagers, the cruise companies and so on and so forth, is technically her personal income, and it has to be declared as such. And the fees which she pays to the other musicians are her business expenses, along with all the other costs that she will incur. Her profit is the money that's left over, and I suppose that comprises her fee for playing herself in the quartet, plus the money that she makes from managing it, but there's really no distinction. It's important to note that if the owner is also working as a self-employed performer in her own right in the usual way, there's no separation of the two businesses. She's simply self-employed in the eyes of the law and the tax authorities. If she wants to, there's nothing to stop her producing separate accounts for the quartet and for the rest of her work, but the profits will be added together when her tax liabilities are calculated. Again, in the unlikely event that the quartet were to lose a significant amount of money somehow, let's say that the quartet failed to turn up for a high-profile cruise and she was sued for breach of contract by the cruise company, then all her personal assets would be at risk. There is no protection because she is just self-employed. Registration and tax are no different from ordinary self-employment, but remember that you can't avoid tax and national insurance by splitting a business in two. In particular, VAT registration will be required when the total income from all your businesses exceeds the £85,000 threshold. It's the person who is registered and not the businesses. Dowland's Dismay is a performing ensemble of 5 musicians. At the moment, they just give a couple of dozen concerts a year, but they're hoping that the work will increase. The membership of the ensemble is fixed, and all the players have an equal say in how the ensemble is run. They share the earnings equally. Here we have what's called an informal partnership. The musicians are not bound together by a formal and legally binding partnership agreement, such as the partners in a firm of solicitors might have. They simply work together when an engagement comes in, but there's no long-term commitment on anyone, and the members are free to resign from the ensemble should they so wish. There are a lot of these partnerships around. A group of music students who do a gig together in a pub and then share out the proceeds are effectively in an informal partnership. Further up the professional ladder, a professional string quartet with, say, a concert series at Wigmore Hall and performances around the UK and internationally is also very likely to be an informal partnership. So who's this arrangement suitable for? It's, again, unlikely that the ensemble will be taking on significant financial risks, and the musicians aren't too worried about the fact that they are personally liable for the debts, simply because there aren't likely to be any. However, the warning about concert promotion is still relevant, although it would be unusual if an organisation like Dowland's Dismay were to book the Royal Albert Hall for a self-promoted concert. There are, as such, no registration requirements for an informal partnership. The individual musicians will, however, of course, have to register as self-employed, but they will simply declare the fees that they earn from the quartet as freelance income, and they will also be able to claim as expenses any contributions which they make to the running of the quartet. Of course, all running expenses will need to be divided equally between the 5 members, and that can lead to some real complications. Let's therefore take just a moment to look at how an informal partnership might manage its finances. It's all very well to split the fees at the end of each concert and to ask everyone to contribute their share when expenses arise, but telephoning all the members of the ensemble and asking them to send you a 1/5 share when you've just bought a book of stamps can get a bit tedious. So we need a banking system for my informal quartet. And it can work like this. First of all, you need a specific bank account which is set up solely for the use of the ensemble. Now, if you go along to one of the big banks and say that you want to set up a bank account for a musical ensemble, they will rub their hands together and they will try to sell you a business account, and you'll find yourself paying business bank charges every single month, even if the account has not been used. A better idea may be to go along to one of the smaller banks, where they may well allow you to set up an account in the name of the ensemble without actually charging you a fortune every month for doing practically nothing. If you can't manage that, then the other option is just to have 2 members of the ensemble to open a joint account in their own names, but it is important that is reserved just for the use of the ensemble. There is one slight complication with that, and that means that payment, of course, has to be made not to the name of the ensemble, but to the name of one or both of the members who hold that bank account. But it's a very minor problem, and if it saves you a few £100s in bank charges every year, then it's certainly worth considering. Now, when the bank account has been set up, each member of the ensemble pays in a small float just to get things off the ground. That might be £50 or £100, and don't worry, you're going to get that money back later on. And that float now sits in the accounts, and that can be used to pay business expenses as they arise. Every time the ensemble gives a concert, a performance, a certain proportion of the money arising from that performance is retained in that bank account. So, for example, if there are 5 members of the ensemble and they receive a fee of £600, you might decide to pay each of the 5 members £100 and to leave £100 in the account against future expenses. And so over time, money is coming into the account every time you give a performance or make a recording or broadcast or whatever, and money is being spent from that account to pay the expenses of the ensemble. If a member decides to leave, then they are given their original investment back, and the replacement member who joins the ensemble pays in the same amount. And so the bank balance doesn't actually change. And of course, the other beauty of this system is that nobody can claim that they actually own, let's say, the viola parts of the string quartet and run off with them when they resign. No, everything is held by the ensemble, and leaving members are paid out, and new members coming in buy their way in. They buy their own share. It's a very, very neat way of running ensemble finances. There are a couple of important rules, however. You must only use the money in the account for genuine quartet ensemble expenses. You can't, for example, get to the end of a rehearsal and all decide to go around the corner for a slap-up meal in a local restaurant and charge that up to the account, because that would not be a business expense. Neither must you allow the bank balance to run up to an unreasonable amount, because HMRC will say that you are delaying tax liabilities. So if, for example, you have a lot of work in and the account suddenly finds itself with £5,000 in it, and your business expenses over the next 12 months are only going to be £1,000, then you would be expected to pay £1,000 to each of the members, depending on the number of members there are in the group, and they would then declare that as if it were an extra concert fee. Now, what might happen to Dowland's dismay were they to find themselves so busy that the ensemble was becoming a very, very significant part of their professional lives, with, say, a university residency and a summer festival and a concert series or two? They could very well decide to set up a formal partnership instead of an informal partnership. They would usually want to draw up a partnership agreement using a solicitor, and this would set out the terms and conditions of their mutual relationship. If this were to happen, the tax arrangements would be different. The partnership would itself need to register with HMRC, just in the same way that a self-employed individual has to register. Accounts would have to be prepared for the ensemble annually, and the ensemble itself would have to submit an annual partnership tax return. However, the partnership itself would not pay tax as such. The individual partners would then be required to declare their personal shares of the profits in their own tax returns, and they would be themselves liable for their own tax payments. The personal self-assessment tax return has a section where profits from formal partnerships can be declared. Of course, there's nothing to stop the individual members of the ensemble being self-employed as well. They are all very likely to be taking on freelance work when working outside the ensemble. But because there is a formal partnership agreement here, their self-employed accounts would not include any income or expenses which actually related to the ensemble. But once again, we have an example of unlimited liability here. Even a formal partnership offers no protection against debt or liability or creditors. So we've now covered self-employment, and we've covered informal and formal partnerships. Let's move on to look at my agency, Charisma. Charisma is an artist agency, and it's run by 3 partners. They have quite a few artists on their books, and the 3 partners work for the business full-time. They also employ a small staff. The profits are shared between the partners in an agreed ratio. They have a formal partnership agreement which was drawn up by their solicitor. They are handling considerable amounts of money, and because they don't want their personal assets to be at risk, they need what's called limited liability. This means that should the business run into serious financial difficulties and find itself unable to pay its debts, the creditors could not insist on the partners delving into their own pockets to make up the shortfall. The partners want to protect themselves financially, so rather than setting up an ordinary formal partnership, they decide to register as a limited liability partnership, an LLP. This is similar in many ways to an ordinary partnership in that the partners are still liable for their own tax. Accounts will be prepared for the partnership, and the partners' individual shares of the profits will be declared in their personal tax returns. However, there are some significant differences. First, a limited liability partnership has to be registered with Companies House, as well as with HM Revenue and Customs, and it will have to put the letters LLP after its name. This serves as a warning to anyone who has financial dealings with the partnership that it will not be possible to pursue the individual partners should the partnership be unable to pay its debts. Annual accounts and something called a confirmation statement, it used to be called an annual return, will have to be filed with Companies House, and these documents are open to public inspection. Fees apply when the LLP is registered, and there are also annual fees for filing the accounts and the confirmation statement. There's quite a lot of work involved in running an LLP, since you'll be dealing with both HMRC and with Companies House on a regular basis. And there's very little point in setting up an LLP unless you really do feel that you need the protection of limited liability. And in most cases, as with my agency, that's because you're going to be handling other people's money or possibly risking large amounts of your own. So there are the three different types of partnership: the informal partnership, the formal partnership, and here the limited liability partnership. Let's move on to the Musical Gizmo Company Limited. They make all sorts of interesting musical gadgets, including personalized metronomes, self-opening music stands, violin bows which automatically add rosin when the hair starts to dry out, and piano stools which sense your height and weight and just adjust themselves automatically. They have a large international turnover, and their products are manufactured in China and Japan and India. The business is owned by 5 individuals who have contributed quite a lot of their personal capital. One of these individuals works full-time for the company as its managing director. Another of them has no day-to-day involvement, but is just an investor. This is the classic scenario for forming a limited company. The owners of the company are not necessarily involved in the day-to-day running of the business, and while they're prepared to risk their initial investment, they don't want any liability for the company's debts beyond that. Most companies have a share capital and an initial investment, and they issue dividends which relate to the company's profits, and those dividends relate to the proportion of the share ownership, which in turn relates to the initial investment that people have made in those companies. The shares can be bought and sold, and shares will go up in value if the company is doing well, and they will fall in value if the company is doing badly. Unlike a partnership, the profit is shared amongst the people who have contributed to the capital of the company in the proportions to their shareholding. It's important to understand that a limited company is an incorporated body, and if you know your Latin, you will appreciate that the word incorporated, means to create a body. This is an essential concept. A limited company has a legal existence which is completely separate from its members or its owners. In effect and in law, a limited company is a person. It can have debts which are separate from its owners, it can be sued in its own right, and it can go bankrupt without any knock-on financial effect on the owners or the directors, provided, of course, that they've been running the company legally. This is a completely different setup from a sole trader or a partnership where the individuals concerned are themselves the business. In most cases, they remain personally liable for everything that the business does, although the limited partnership structure does give some financial protection, as we've seen. There are two ways of setting up a limited company. First, you can do it yourself, but the documentation is pretty complicated and it's easy to make a mistake with the paperwork. It's far simpler to buy a ready formed company from what's called a company formation agent. You can do this for as little as 20 quid. Try Googling limited company and see what's on offer. These agents set up large numbers of limited companies with temporary names, temporary shareholders and temporary directors. If you want one, you buy it and all the names are just changed to fit in with your requirements and off you go. It's no more difficult than buying a CD online. As with limited liability partnerships, the registration is with Companies House. However, the taxation arrangements are totally different. Limited companies don't pay income tax, they pay corporation tax, and the liability to pay the tax rests with the company and not with the shareholders and not with the partners. Once the corporation tax has been paid, the profits can be distributed to the shareholders as dividends, but the company and its directors can choose to retain all or some of the profits. They don't have to be distributed. The directors of the company, who may not be the same people as the shareholders, of course, may decide to plough the profits back into the company in an attempt to grow its profitability, or they may simply decide that they want to hold some of the cash in reserve. Therefore, if you are a shareholder in a limited company, don't expect to receive a proportion of the total profit that the company makes every year. The company is run by the directors, not by the shareholders, although, of course, it's usually the shareholders who elect the directors. When you receive your dividends, you pay a smaller rate, I should say it again, when you receive your dividends, you pay a smaller rate of tax on the dividends because corporation tax has already been paid, so there's just a small additional top-up to pay. Under current tax law, the first £2,000 of dividend income you receive in any tax year is tax-free, and after that it's taxable at 7.5% if you are a basic rate taxpayer, or 32.5% if you are a higher rate taxpayer. Unlike individual taxpayers, limited companies don't get an annual personal allowance. Tax is payable on all the profits, but a lower tax rate applies. It's currently 19%, and the government has said that the corporation tax rate will go down to 17% from April 2020. There's a rumour around the music profession that registering as a limited company when you are actually self-employed is a good way of saving tax because the tax rates are lower. Well, that's true to an extent. A company pays a lower amount of income tax, generally speaking, than an individual. But as soon as you actually take the money out of the company, then you have to pay extra tax, and that, generally speaking, will just take the tax that you pay back up to the limit that you would have paid if you'd been self-employed in the first place. There can also be desperately complicated issues if you form a limited company when you are actually self-employed. Your instruments, for example, will belong to the company. And if you then want to dismantle the limited company and going back to being self-employed, you will have to buy your instruments back from the limited company, and that can involve capital gains tax because there is a theoretical profit which the company has made. There can also be enormous problems if you try and work overseas when you're a limited company rather than an individual, and you can find lots of really complicated tax issues arising if, say, you go and work in the USA as a limited company rather than as a musician who is self-employed, where there are specific rules in your favor. And of course, also various documents are available to public inspection, and you may decide that you're not terribly keen on other musicians looking at your accounts and finding out how much profit you've made. So in general, if you're self-employed, stick with it. Forming a limited company when you don't need one is complicated and potentially very, very expensive. Let's now look at Music is My Life, a registered charity supporting elderly musicians. So this is a registered charity, and let's just look at those two words separately. It's registered because it is an incorporated body, much like the limited company was an incorporated body. It's also a charity, and a charity has to exist for public benefit. And there are various definitions of public benefit issued by the Charity Commission, and they include such things as the relief of poverty, which is relevant here, and education, and fortunately for us, promotion of the arts. The charity is run usually by a board of trustees, typically a minimum of 3, and they are not paid for their work as trustees. They can, to some extent, be paid for work which they do for the organisation, but it's usual for trustees and staff to be completely separate, and a trustee is not allowed to charge for the work that he or she does as a trustee. Charities are what are known as not-for-profit organisations, and that's a slightly misleading expression. Not-for-profit means that any money that the organisation raises or makes is ploughed back. It's not distributed. The profits are not given to shareholders, for example. With a registered charity, any money it makes has to be used in connection with the objects of the charity, and they are defined at the time that the charity is set up. Until recently, most charities were formed as companies, and they were registered with Companies House, much like the musical Gizmo Company Limited, and they were also registered with the Charity Commission. That meant that all the paperwork had to be submitted to both Companies House and the Charity Commission, and there were fines imposed by Companies House if the paperwork was sent in late. It's still possible to set up a charitable company in the old way, but there's now another option, and this is the Charitable Incorporated Organisation, the CIO. Everything with the CIO is handled by and through the Charity Commission. There is no longer any need to register with Companies House, and the whole process is much simpler. The Charity Commission will provide a specimen constitution on their website, and they will often help you with the public benefit test by sending you copies of successful applications made by other organisations which are similar to your own. Registered charities don't, of course, pay tax, but of course this doesn't mean that their staff don't pay tax. Neither do they have to register for VAT. They can also claim gift aid tax relief on donations which are made to them. And how does that work? Well, if you are an individual who wants to make a donation to a registered charity, you are paying that donation out of income of yours, which has already been taxed. And the money that HMRC have got from you is then effectively refunded through a rather complicated system to the registered charity. So let's imagine that you make a donation of £80 to a charity. You will, as a basic rate taxpayer, have needed to earn £100 to have that £80 because 20% will have been taken by HMRC when they taxed you. Under gift aid, that £20 that you paid is now reclaimable by the registered charity. So by paying £80, the charity actually receives 100. So in effect, your donation is increased by 25%. Many arts organisations are registered charities. They work for the public benefit, and they are ultimately governed by an unpaid board of trustees, although the employed staff will be responsible for the day-to-day management of the charity. If you're planning to set up an organisation which may attract donations or grants, then a registered charity may be the right format for you. But finding suitable trustees who are prepared to put in the time and the commitment can be a problem. The trustees are legally responsible for ensuring that the charity remains financially and legally compliant, and the buck really does stop with them if and when things go wrong. Finding people who are prepared to make that commitment may be a problem. I want to mention as well that there is occasional confusion between a CIO and a CIC. A CIC is a community interest company. It's a completely different thing. A community interest company is a social enterprise that wants to use its profits and assets for the public good, but it is not a charity. So there we are. Unless you're doomed to being in full-time employment for the rest of your working life, at least one, and probably more than one, of these business formats would be relevant to you. You may, like Dennis Marshall, spend your professional life as a self-employed professional, a sole trader, as HMRC will describe you. Perhaps your self-employment will involve engaging other musicians, as does the owner of Captain Ismay's Quartet. You're still a sole trader, but you're beginning to make money out of other people, and that might start to give you ideas about really going into business. Perhaps, like Dowland's Dismay, you may find yourself in a partnership with a few colleagues. Initially, this might be nothing more than an informal arrangement, but as things get busier, you may need a formal partnership agreement, with the partnership preparing its own accounts and submitting its own tax returns. If you're worried about financial risk, then you may want to look at a limited liability partnership where the partners register with Companies House. Charisma have done this. The partners are still responsible for their own tax, but if things do go seriously wrong, their creditors will not be able to bankrupt them personally and individually. The Musical Gizmo Company Limited is much more what people expect when they think of as a company. There are shareholders and there's a staff. The company pays corporation tax and the profits are distributed as dividends to the shareholders. If there is a financial catastrophe, the company may go bust and the investors, the shareholders, will lose their investments, but that's all they will lose. And finally, music is my life, doing good work with a board of dedicated trustees and no tax to worry about, apart from dealing with its employees, PAYE, and claiming back gift aid on the donations it receives. Of course, there are other business structures, but you're not really likely to encounter them very often. Above all, however, all the businesses that we have looked at today have ISM at their very heart, and that's an important message for anybody trying to survive in the music profession today. I hope this webcast has been of use. As I said at the beginning, if you have specific questions on any of the formats I've talked about, do feel free to contact one of the ISM helplines or send us an email and we'll do our very best to answer your question. Thank you very much.